Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. We told you first and now it's official. The union government has opposed Hindustan Zinc's plan to acquire Vedanta's global zinc assets. It has also added that it will vote against the proposal at the EGM. Earlier today, we spoke with Arun Misra, who is the CEO and whole-time director Hindustan Zinc, and he said they will engage with all minority shareholders and it is looking to grow globally via acquisitions. Listen in.
We have a 3 months time period after the board meeting to conduct or convene shareholders meeting, and we also need to have approval from majority of the minority shareholders for the deal to go through. So those are the rest is all process. So we are going through the process right now. Government and Ministry of Mines is the important stakeholder in our business. They have 29.5% of shares. So I'm always in touch with them for all matters of strategic importance to the company. It will be an OFS. It cannot be anything other than OFS. And I'm very, very hopeful that before March, we should have this in the best interest of everyone.
Okay, that's the word coming in from Hind Zinc. Important clarification there. Moving on to the fifth headline now. Crude prices remained in a tight leash as supply worries wane and the market awaits the effect of demand recovery from China. However, fear of rising interest rates continue to weigh. Manisha Gupta is here with the latest from the oil space. Hey, Manisha.
Well, yes, the crude oil prices have been making lower lows, and after 5% of a decline in the previous week, we are just about trading flat as we start a new week here. Hotter than expected data in the U.S. markets have yet again fanned concerns about higher rate hikes from U.S. And then many of the supply concerns seem to be easing. For example, the U.S. inventories at 842 million barrels is now at October 2022 highs. U.S. also is looking to sell or give more by 26 million barrels via the Strategic Petroleum Reserve. If you look at Kazakhstan, they also are supplying nearly 100,000 tons of oil via Russia's Druzhba pipeline. Markets also are looking at Asia taking a lot of Russian crude oil. Actually, when you look at India, our own imports of Russian oil for the month of January have been at record highs. So there is no dearth of oil really coming into the markets. The only positive that you see is from the OPEC and IEA saying that strong demand is what they're anticipating in the second half of this year as China continues to reopen, and that is where you will see tightening of markets there. The experts tell us that from these current levels, there could be yet another couple of dollars of a decline that you can anticipate, but it is a $4 of a jump up from these levels that they are anticipating. So 2% down to 4% up is the kind of range that the crude prices could be looking at as we move ahead from here.
Manisha, thank you so much for joining us with all those details. Let's stick with the energy space now. Oil majors have seen record high profits in 2022, but that is not the only record when it comes to the energy space. Fossil fuel subsidies, they have hit $1.1 trillion in 2022 due to the global energy crisis. That's an all-time high, and it combines subsidy for oil, natural gas, electricity and coal. This is as per the International Energy Agency. If we chart out the numbers over years, this is a substantial jump. In 2010, it was around $0.6 trillion. Then it moved to levels of $0.75 trillion. Then it started coming down. In 2016 to levels of $0.37 trillion. Then it went higher to $0.58 trillion. But 2020 saw a sharp downtick, understandably due to COVID and sharp decline in energy prices. It picked up in 2021, and that is after when we saw in 2022 to $1.1 trillion. If we go forward and talk about this number, it's an all-time high. But if we split it further, subsidies for natural gas and electricity consumption more than doubled in 2021, and all subsidies rose 85% on a YOY basis. Most of the subsidies were given from emerging markets and developing economies as well. And more than half of these subsidies were from fossil fuel exporting countries. That's not very surprising. Though Europe spent $350 billion on energy subsidies, this was coupled with issues around supply from Russia. We spoke about higher electricity prices and gas prices as well, which now have cooled down. Everyone wanted to focus on renewables, but energy crisis did not allow that. According to Bloomberg, fossil fuel subsidy was more than double of the total investment that was made in the renewable energy sources. And important to note, this happened right after 2021 COP, where all the nations agreed to accelerate efforts to phase out fossil fuel subsidies. So clearly, decarbonization in a volatile environment will require more efforts. So that's the update, an important update coming in from the fossil fuel space. But with that, it's a wrap in this edition of Markets Today. Stay tuned for more updates on CNBC-TV18.